After months of dropping like a cold stone, global oil prices rebounded significantly this week by jumping nearly 20% in the space of just 4 days. But is this a sustainable turnaround or merely a blip before prices head south again? Hwang Ji-hye has the forecast.
Global crude prices have risen every day for the last 4 days, with prices gaining 19% over the period. That's the biggest advance since January 2009. U.S. benchmark West Texas Intermediate crude oil prices hiked 7% on Tuesday to $53 a barrel, while Brent oil finished up almost 6% at around $58 a barrel. The price gain came as the U.S. dollar tumbled around 1% against a basket of currencies on the same day, bolstering the value of dollar-denominated commodities. The drop was the biggest daily decline since October 2013. The surge in oil prices also came on the back of major energy companies announcing plans to streamline operations as a means to stem plummeting oil prices. BP made the latest move on Tuesday, saying it will slash spending on assets and investments by as much as $6 billion this year. So, is the oil sell-off over? CMC Markets' Michael Houston is skeptical, saying BP and other energy companies might have to prepare for prices to drop again.
It's going to have to keep a lid on costs. It's going to have to be very forensic in terms of future capital expenditure, and it's going to have to get used to essentially a much lower average oil price over the next 18 months to 2 years.
Industry group American Petroleum Institute also says that U.S. crude oil inventories rose more than 6 million barrels last week, fueling concerns about an oversupply. Traders also cite temporary factors like strikes at U.S. refineries that affected the 4-day oil price rally. Hwang Ji-hye, Arirang News.